Hi traders, in this video I will show you how to get A plus trading setup using Confluence. Now what is Confluence? Confluence is simply a combination of two or more confirmation before taking trades. So you want to see two or more confirmations, that is something giving you strong reasons why you should take a trade. That's simply what Confluence means. Alright, so to get an A plus setup using Confluences, these are the Confluences to look out for. Number one, you need the market structure directional bias. This is the first Confluence to look out for because it helps you to know the trend of the market and where price is likely to get to. Then number two is to mark your institutional reference points, such as your order block, fair value gap, liquidity void, and all these things. Then thirdly, you wait for retracement to the point of interest, your POI. So this is the place where you want to take your entry. That's like going to the lower time frame. So let's get to the chart so I can explain all these things for you. Now, in the charts, these are the trades I took for this week. These are the trades I took, and you can see how this played out. So now, first of all, we want to know the market structure. Now you can see that if we go to this is the 1 hour time frame, right? This is the 1 hour time frame. Now from here you can see that this market is in an uptrend. From here, this is an uptrend. So from this 1 hour time frame, this is my directional bias that this market is going up, right? Now the next thing is to mark my institutional reference point. So this trade I took here, now this trade I took here, this trade I took here, this is my order block. This is my order block. I took this trade. So the moment price got to my order block, I entered this trade. I entered to this point. And also I tried selling here. Why I tried, I got stopped out because I felt the market was also changing direction, was going to go down because of the aggressiveness at which it came down. So I took this trade. I took this trade now as a retracement to this order block. Then I sold from here, but I got stopped out. Now when I got stopped out, I saw that the market has continued the trend, that's continued going up. Then I took another trade here again. Then I took another trade here. I took a trade here. So the moment I saw this break of structure, wait for retracement, there's a small fair value gap here. So I entered here and my stop loss was just below this point. This was exactly where my stop loss. And I target this liquidity. So first of all, the market structure, my directional bias was an uptrend. Now, secondly, I marked my zone. I begin to mark my zone. Also here, so when I knew that this market is an uptrend, is a continuation, it's going to continue the trend, I began to mark zone also. I mark my reference point, so it's also, I also call it a zone. I begin to mark my reference point. So these are how here is also a reference point I mark. This was why I put my stop loss here. This order block, this is another block, and there's a small fair value gap here as well. There's a small fair value gap here. So okay, so after marking this thing, I waited for a retracement. So to get A plus setup, the first is market structure directional bias. The second is to mark institutional reference points, like I did here. I marked my order block, and here is a fair value gap. Yeah. So the moment I saw that price has mitigated this thing, I entered here. I entered at this point and I set my stop loss here. So that is like the last is wait for retracement into that point of interest. So this order block became my point of interest, and this fair value gap became my point of interest. So I waited to when price retraced, and I saw the way price is going to go up. Then I entered a trade from this position, and it delivered. So that is basically how to get an A plus setup. And now currently, since the market is also in an uptrend, I'm waiting for price to get to this point. I'm waiting for price to get to this fair value gap before I can buy. That is it. So this is going to be an A plus setup. So if this price comes to this place and drop, fine, I've lost the trade. But if it comes down here and go up, fine, because this is my confirmation. This is, so I've gotten, in fact here alone I've gotten two confirmation already. So this is a mitigation block with a fair value gap here. So that is an institutional This is an institution. This is a strong institutional order flow. It's called IOFED. It's a strong institutional order flow. So a combination between two institutional reference points that indicates a strong. It shows that the market is really going to go towards that direction. So I'm waiting for price to just come down. So when the price gets to my entry point, I'm going to buy. That is how it is. So first of all, you want to check the market structure directional bias. Number two, you want to mark your institutional reference point, your order block, fair value gap, and the rest. Then, lastly, you wait for price to get into that order block. It's also called point of interest. You wait for price to get to that point of interest before you take your trade. So with all these things in place, you have the confidence to take your trade. Now, what is left for you is to use your proper risk management and take your trade. Alright, so thank you so much for watching. If you found this video helpful, kindly like, comment, and subscribe. See you in the next video.